Good. Okay, we are live. Good morning, good afternoon, good evening, good day. Welcome, welcome, welcome. My name is Clara Lyons-DeVaughn. I hope you are having a phenomenal day. And I say good morning, good afternoon, good evening because it depends on where you are and what time you are watching. Hopefully, you're watching us live, but if you're checking out the replay, that is cool as well. Again, my name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. We also have Lyonsview Academy, which is our educational arm, which provides real estate pre-licensing and continuing education courses. I'm really, really glad that you tuned in today. Welcome, welcome, welcome. Lyonsview Realty Financial Fridays is here to help you stay current on those trends that impact your bottom line. Our goal is to provide you with resources, information, and tips to assist you in making the best financial decisions. And our commitment is to maximize your wealth building power now and in the future. So, welcome, welcome, welcome. Just remember that our guests are here as a resource to you. And if you have any questions, you can put them down in the chat. So I'm still waiting for our guest for this morning to log on. He's coming in on California time. So it's a little bit earlier there than it is here. But there he is. Yay.
Hey,
Good morning. How are you?
good. Thank
Good.
you for letting me get on your podcast. I appreciate that.
Oh, no worries, no worries. You're right on
Yeah,
time, right on
yeah.
time. So I was just telling our guests, good morning, Miss Beckwith. Thank you for joining in this morning, listening in. Um, I was just telling our guests that our guests are here as a resource to them. Here on Financial Fridays, we provide quite a bit of information. And the series that we're going to be talking about today is Show Me the Money. Yeah, show me the money. So, how are you doing this morning, Frank?
it's quite earlier than where you guys are on the East Coast, but I'm up. Maybe a little bit bleary eyed, but I'm ready to go.
I appreciate it. I appreciate
Yeah,
you taking the time. And also, I know the time change is kind of crazy. So, I appreciate you getting up extra early to be with our listeners this morning. So, tell us a little bit about yourself, who you are, who you work for, and what you do.
yes. My name is Frank Evans. I work for U.S. Bank. I've been in the mortgage industry for over 20 years. Prior to becoming an originator, I was with a World Savings, which was a savings and loan organization. And at one point, had 600 employees under me.
Okay.
But due to mergers and acquisitions and having to lay off a lot of people at one time, I decided to become a individual contributor. But I do know a lot about the industry as it relates to Fannie Mae, Freddie Mac products, down payment assistance, and of course we have our portfolio products that can work very well for your customer base. The
Okay.
thing is that we're in a time where African Americans do need to be able to get into their own homes, and that percentage is really down and compared to the rest of our citizens in this country.
Indeed, indeed. And you make a really, really valid point. Number one, home ownership is probably the number one way that people, accrue wealth in the United
Absolutely.
States. And the fact that African Americans currently are at the bottom of that toll pole with around 42% home ownership,
Yes.
we're doing everything possible to increase that percentage overall to get, more to the standard of 70, 75%, which it is, for the rest of the country. But even more importantly than that, for all of our homeowners, there's a lot of products out there that if people are really interested in becoming homeowners, there really isn't any reason why they shouldn't. And we're going to talk a little bit this morning about some products that your company has that
Yes.
specific to really helping people lower their monthly payment and having down payment assistance to get into this homeownership game. So, which product would you like to begin with?
Well, I'll start with the FHA VA product. Of
Okay.
course, every broker and every lender has that product, but U.S. Bank has a different twist. As you know, the interest rates are going up rather quickly in the marketplace. So, what U.S. Bank has done, if say you have a borrower that gets qualified at 5.5%, that's just an example. The first 12 months, we will give them a relief of 4.5%. And that is no cost. That's no cost to the borrower at all. And that's for FHA and VA. Secondly, we have what we call the American Dream Program, which is U.S. Bank's own down payment assistance program, where they can give $10,000 in down payment assistance, and there's lender paid mortgage insurance to go along with that.
Okay. Those are both really, really wonderful programs. So if I understand it correctly, under the first program, whether you're FHA or you are VA, and I'm going to have you talk a little bit about the difference between FHA and VA in a moment.
Yes.
A borrower can get a 1% reduction in their rate for the first 12 months of their mortgage. That's huge.
That is correct.
Yeah.
That is correct.
That's money that they can save monthly,
Yes.
put back in their pocket.
Yes. And also wait for the interest rates possibly to go down, where they could possibly refinance their home in that 12-month period. But the thing is, they won't have to wait 12 months to go buy a product.
Gotcha. And that's something I keep hearing people saying, home prices are going to go down, interest rates are going to go down.
Yes.
Not necessarily, but the fact that, your company is offering that people can get that 1% reduction for a year is huge.
Yes.
So they take advantage of it while they're waiting to see if, in fact, the rates do go down and refi later. That's pretty awesome. And talk a little bit about, I'm going to go to the American Dream Program in a minute, but talk a little bit about the difference between FHA and VA for the people who may not know what that is.
So both of them are Ginnie Mae products,
Okay.
GNMA products. FHA is for the normal citizen in America. The VA product is strictly for veterans and people who were veterans at one point in time and their families. So, of course, the VA product allows for 100% financing, which is outstanding as well. And to be able to get that 12-month relief or at 1% is amazing with that product.
It is. I say, show me the money all day long.
Yes.
People are looking for ways to change. So if you're a veteran, not only do you get 100%, down payment relief, but you also get an additional interest rate reduction of 1% for a full year if people work with you and go with your product. And then
That is correct.
On the other side is FHA. So what's the down payment typically for an FHA product?
So you can go as low as 3.5% down payment. So you're at 96.5% loan to value. Of course, with FHA product, you're going to have mortgage insurance on that product. It doesn't matter whether you're at 80% or below. It's just FHA attaches mortgage insurance to that product, and it's going to be with that product until you sell or refinance your property.
Wow.
A lot of times you have people that go with the FHA product just to get into a home because it has a low down payment. And of course, with the 12-month relief, that's a benefit to the borrower, right? And then you can refinance into a conventional product once your property appreciates. And with the conventional product, if you have to have mortgage insurance, once it gets to 80%, you can call the financial institution to ask them to remove the mortgage insurance. But definitely once it's at 78% loan to value, it will be removed automatically.
Awesome. Now you said something, and I just want to make sure I heard you correctly. With the FHA product now, even at 20% down, there's still private mortgage insurance.
Yes, there is private mortgage insurance with that
Wow.
product, FHA.
Wow. Okay.
Yes.
So with the conventional product,
So with that, it's upfront mortgage insurance with FHA.
mm, gotcha. So they're
Yes,
paying more upfront, and then with this, 1% rate reduction, that will help them recoup some of that upfront cost.
that is correct.
Awesome.
And
Awesome.
al- and also we provide the borrower with a 0.25% um, lender pay credit to help with their closing costs. All right. So if it's a $250,000 or say $200,000, then you're going to get extra $450 towards your closing costs.
Nice, nice. And every dollar counts, especially as
Yes,
you pay more and more for your mortgage. That number goes up, and that's
yes,
a beautiful thing to get any type of credit from the lender, especially in this market. And then you were saying the 1% reduction rate reduction program can also be used with a conventional product as well.
no, not with the conventional product.
Okay,
Only with Ginnie Mae products,
okay,
FHA and the VA product.
gotcha. With those
Yes.
two,
And of
okay,
course, we have portfolio products as well for customers that have, I mean, there are situations where you have jumbo loans across America. And with our footprint, we're able to originate loans in all 50 states. So, I mean, I originate loans in Florida, New York, Ohio, Illinois, Iowa, California, all over the place, Texas,
yeah,
because, our platform is the same across the US.
gotcha, gotcha. And you can do New Jersey.
Yes, absolutely.
Awesome, awesome. Philadelphia,
Doesn't matter.
New York.
Yes, yes,
Awesome,
yes,
awesome, awesome. That is wonderful. And then the second product that you talked about was the American Dream, which is a down payment assistance program. So with
yes.
that one, does it matter if it's FHA, VA, conventional?
Well, it's a portfolio program.
Okay,
So U.S. Bank keeps this product within its portfolio. It's neither FHA, Ginnie Mae, or VA or conventional. It's our
so
own
it doesn't
product.
matter what type of what type of
Scenario might be,
gotcha.
if it fits the borrower, then that's a product they can go with for down payment assistance. Because a
Okay,
lot of down payment assistance programs across the country, sometimes they cut off at a certain period of time because they run out of money.
mhm,
But the mere fact that U.S. Bank has a very large portfolio and have assets, they can provide this product to the public.
gotcha. And then how much money is available for down payment assistance with that product?
It's up to $10,000.
Okay.
Of course, it depends on the loan amount.
Okay.
I would say the average is about $5,000 in down payment assistance.
Okay. Very good. And is there a particular credit score that a borrower would need to have to get the
Credit
down payment?
score, the credit score required is 640.
Okay.
Yes.
Okay. Okay. And then in debt to income range is around.
Debt to income ratio is 43 to 45%,
Okay.
as it would be with a conventional product. Uh, Keep in mind, FHA is 50% debt to income ratio, so that gives a little bit more relief to the borrowers as well, as far as their debt to income ratio is concerned.
Right. So a person can get anywhere from up to $10,000, depending on the amount of their mortgage. They only need to have a minimum of a 640 or higher credit
Yes,
score for the
yes,
down payment assistance program. That's pretty.
yes,
That's pretty awesome. That's really
yes,
awesome. Yeah, and they
yes.
can be anywhere in um, the United States.
That is correct.
Yeah,
That is correct.
you can underwrite that mortgage. That's pretty good. So we've talked about several ways that people can lower their payment. One, they can get a 1% reduction over the 12-month period on an
Yes,
FHA or VA product.
yes,
They can get the down payment assistance uh, up to $10,000, and it doesn't matter what state they're originating that, and that's a specific product to a U.S. bank that you're carrying in your portfolio. And then there was a third way, which I thought was really, really interesting in terms of the private mortgage insurance. Talk a little bit about that and how that works.
Oh, you mean for the American Dream program, or
Yeah, is that what
for?
the American Dream program, the
Yeah,
private mortgage insurance?
that's a American Dream. It's lender paid mortgage insurance for the American Dream program.
Okay.
So the customer does not have to worry about paying the mortgage insurance separately. And believe me, it's a very competitive when they're able to pay the lender paid mortgage insurance through their mortgage and not have to worry about that separately.
That
The great thing about all these products is that I tell a lot of borrowers is that, the most important thing is to get into a home.
right.
You get into the home the best way that you possibly can. I remember when I first purchased my first home in California back in 1990, interest rates were 11.5%.
Yeah.
I was ecstatic about being able to get into a home because it's a tax write-off and you have a home that's going to appreciate in value.
Indeed.
Because if you're renting, you're paying 100% interest. Isn't that correct?
You're paying over 100% interest.
Yes.
Indeed, indeed. And I think that's really great advice for folks to really understand how important homeownership is to your financial position moving forward. And people come up with a lot of different reasons of why they think, oh no, one is I can't afford it, and it's unfortunate because there are so many programs like the ones that you're offering at US Bank that help people with the upfront costs of getting into the program. I remember when it was 20% to get
Yes. Yes.
a home purchase, and when the interest rate was a lot higher and people were still purchasing homes. Now the interest rate is lower. Granted, it has been creeping up, but it's still
Yes.
under double digits, which makes it quite affordable. And the down payment to get in, you're saving almost 17% that you don't have to come up with upfront for money. And there are programs like the one that US Bank is offering, up to $10,000 to assist with that down payment. So those programs weren't available when I got into.
Same here.
So there's really not a lot of reasons. If you are employed, if you have a credit score of 640 or above, there's no reason why you can be considering trying to purchase a property at this point in time. So I'm really, really excited about all of the programs that US Bank has available. I'm excited for you, Frank. I really appreciate you taking the time to come on this morning and show me the money. Show our borrowers.
Yeah, we all need some money, correct?
Oh my goodness, yes,
Yes.
It's great to be able to leverage the funds that you have, and if you don't have the funds, it's like double leverage. So I get excited when I hear about new programs or new ways that people can, figure out how to get into the line in terms of home ownership, because it is the best way to build wealth in this country. Like you said, the tax write-offs. There's so many benefits.
Yes.
There's
Yes.
so many benefits to home ownership, and so I'm excited about it. I'm glad that you're here, that you took the time this morning to meet with us. Anything else you want to share before we close out?
Yeah. Well, I would just say that with a conventional product, you can pull it as low as 5% down. With conventional FHA and VA, the minimum credit score required is 620.
Okay.
So it's a little bit lower. There's always options available.
Right.
If anyone has any questions, I'll send you my contact information.
Okay.
Because
Give it to me. I can put it in the chat. That way it'll attach itself to the video.
all right.
Or I can put it on your name tag, so it'll show up. So what's the number?
Oh, number is area code 310
Okay.
717
Okay.
7866.
7866.
Yeah,
Okay.
that's my cell number. I'm mobile. Because of COVID-19, I'm not working out of the office. The best way to reach me is to contact me via my cell, either by voice or text message, or to email me, and I'll try to be as available as possible.
Awesome. Awesome. Well, I appreciate you being available this morning. And if you are interested in the 1% rate reduction for the first 12 months of your mortgage that US Bank offers, if you're interested in up to $10,000 in down payment assistance, and if you're interested in the PMI credit, um, or the, I don't know how to say that, but the
Lender paid mortgage insurance, LPMI.
yeah, lender paid mortgage insurance, which is huge because I know. Now, do you handle that for the upfront PMI that gets paid at settlement, or is it just moving forward?
Oh, no, it's not upfront. It's just part of the overall loan approval.
Okay, that's huge.
Well, yes.
I know for a lot of clients, they get their settlement statement, and there's like at least $5,000 of money that they have to bring for upfront
Yes.
mortgage insurance. So that's huge. So if you don't understand what that means, for most of my folks here, it's about $5,000 reduction on your settlement closing costs. So that is really, really pretty huge. So these are wonderful products. Get in touch with Mr. Evans. He is a phenomenal mortgage uh, person who can assist you, who can help you through these programs and through the loan process. Can you talk a little bit about your refi product?
Oh yes, refi. It's the same thing. You can refi on an FHA if it is a primary residence. You can refi on a conventional product, whether it's primary, second home, or investment property. Uh, Also, a lot of times now, because the mortgage rates are pretty high, we have a HELOC product, home equity line of credit. So therefore, you don't, if you have a low interest rate right now attached to your home, a lot of people don't want to refinance because if you're going from 3% to up to 6.5 or 6% or 5.875%, that is sometimes doesn't make sense, and they only want like $15,000 to $20,000 in cash out. The best way to go is go with the HELOC, and you can go with the fixed rate option for 20 years. So you can draw against it for 10 years and it must be paid off in 20 years. But again, with that product, at some point, if the interest rates go down, you can go ahead and refinance your home, uh, take care of that HELOC,
Right.
and be right back where you were before.
Right. And the HELOC is only for owner occupied?
Yes, owner occupied for the home equity line of credit. That is correct.
Awesome.
And that
Okay.
could be in the first position or second position. So if your home is free and clear, you can get a HELOC and it can be in the first position for you.
Gotcha. That's a wonderful strategy that you shared, for people to be able to do the HELOC if, the HELOC rate is going to be more than their interest rate to do a straight refi and then
Yes,
when the rates drop again.
but
Awesome.
it's probably a lower dollar amount though. So if you have a outstanding balance on your property of 250,000, and say your property's worth 500, and then you only want $30,000, that means that you're adding 30,000 to the 250, plus you have closing costs is about $4,500. With the HELOC, there are no closing costs. There are no appraisal fees. So it's just application, get approved, and get your money. Show me the money, right?
Yes. Yes, I appreciate that. Show me the money.
Yeah.
Wow, wow. Well, thank you, thank you, thank you. So appreciate you joining us
Yes.
this morning. If you're listening to this podcast later, definitely reach out to Mr. Frank Evans at 310-717-7866. And he can assist you with any of those products, and all of those products will put money back into your pocket, excuse me, and lower, your mortgage rate overall. I want to thank those of you who are watching us live. Thank those of you who are listening in. Lyonsview Realty is here to provide you with resources, information, and tips that impact your bottom line. And we hope that you receive something of value today. My name is Clara Lyons-DeVaughn. Financial Fridays, we stream live on Facebook and YouTube on Fridays at 9:30 a.m. Eastern Standard Time. And so we will see you again next Friday. But until then, keep living your best life. Thanks
Thank you.
for